Guys, let's look at IBM, okay? It's a top and bottom beat. We're going to get to our reporter in just a moment. Let's take a look at what the shares are doing. They're flat at the very moment.
All right, so there's something else we had to look at.
9% sales growth is what their earnings.
But how about in constant currency? Well, maybe nobody cares today. Today's a negative day.
Their revenue growth, obviously closely watched. They missed on revenue 5 of the last 10 reports.
I think revenue can be good. Like I said, you want to see cash. Cash. Cash is king.
Let's go to Christina Partsinevelos.
Absolutely.
She has it right now. Christina?
Like you said, is IBM beating on the top and bottom line? I do have the wrong part there, but EPS came in at $2.31 on revenue of $15.5 billion. That was ahead of Wall Street expectations. What you want to know for this company is it's a defensive play, and given its high exposure to reoccurring sales and cost cutting, it showed that it could still pull forward, and its Q2 report proved no different. But let's focus in on some of those key businesses, like consulting, for example, a key barometer for whether companies are spending on IT, and the digital transformation to cloud proved weaker than the street anticipated at $4.38 billion. Overall gross margins. So here's the number 2 that we were paying attention to. Adjusted gross margins of 56.5%. That was lower than what the street anticipated, slightly higher than what the street anticipated at 55.7%. And then you had wage inflation, a key driver for the past 2 quarters. There was no mention in this report about jobs cut, but it is a concern because it has weighed on gross margins in the past. Then you had infrastructure revenue that returned to growth with the launch of its new mainframe, up 19% this past quarter. But the mainframe was launched on May 31st, so that number is only a 1-month snapshot, but nonetheless a strong start. Lastly, this is the concerning part. Given the strong U.S. dollar, the currency impact to revenue was $900 million, $200 million more than the April spot rates suggested. Also a drag on those gross margins, which I had put in at 55.2%, not 55.7. Thank you.
All right, Christina, appreciate that very much. Jim?
Mixed. Not good, not bad. I mean, that's all right. I mean, look, we got to hear the call, obviously. Yep. Anyone who's trading on it right now hasn't heard the call.
$900 million hit from currency.
Look, you want to back it in? I don't know whether this quarter we're going to say, hey, you know what, we're going to overlook that, given the fact that it's not like the dollar started to come down. If the dollar started to come down now, then we would just be buying the stock at 142.
If the dollar, let me ask you this: if the dollar and rates started coming down, would we just be buying the market? That's one of the principal problems, is the dollar and rates. It's hard to get bullish about things if the dollar keeps going up and rates go up, right?
We don't want the dollar to continue to go up. It's making our companies much less competitive. When you're a Caterpillar, which is such a good company, Jim Umpleby, when you have Deere, I mean, these are companies where there's an analog in other countries. This is just a giant tariff from the United States. And a lot of these countries are doing it. I mean, Japan wants the yen lower. I think they want the euro lower because they're in such a mess. So it's going to be hard for our companies to triumph over that. But I will say that if you're in a non-competitive situation, NVIDIA and AMD are the only real companies that do high-performance computing. There's still need for high-performance computing. Even if you think that Facebook's not hiring,